Good morning, good afternoon, good day. Welcome to my midweek market meeting, 15th September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter handle. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They act as add-ons on TradeStation and Metastock platforms. I am taking a series of training sessions, Q Master class. We already had one session earlier, and tomorrow 11 a.m. I'll have the next session that is on basics of Metastock for Q Global. I'll cover these two boxes tomorrow 11 a.m. Eastern Standard Time. That was the last slide of the presentation. Let's continue with the live system. A look at the global markets, starting with Australian market. Australian index, all ordinaries, displayed a bearish headwind signal at the very top. Since then, price could not go up. The backdrop color, this week's candle shape so far is indecisive. Weekly has a trend line support nearby. Daily was inside a triangle in our previous webinar, that's the weekend webinar, and that is continuing for short-term trade. Next is Japanese market, Topix index. Topix index was in an uptrend and that is continuing. It was moving sideways and that is continuing. Remember, in the last webinar, we were on this candle. At that time, price technically broke above the trendline resistance. There was a trendline resistance that was broken right on that day. However, looking at the indecisive shape candle, the upper tail, I mentioned that the breakout is not confirmed, and that analysis was very useful again, meaning profitable, because price tilted down after that. It is continuing to move sideways. UK's FTSE index. This was also moving sideways earlier, and that is continuing both in weekly and daily charts. And lastly, India's Nifty 50 index. That was the strongest of the global markets, and that is continuing both weekly and daily, made a new all-time high today. It is in clear uptrend above upper boundary. We are not going to buy now. It is overbought for many days, shown by the stretch band indicator. That will be another reason not to buy now. The trades taken at this point as breakout trades, those may be continued to be held after booking partial position. Partial position profit is the strongest of the global markets. In terms of global markets, we have the same status as in the last weekend webinar. Japanese market and India market are moving in an uptrend, and all the other global markets, Australia, China, UK, they are moving sideways. What about the USA market? Let's look at that using Q Elite on TradeStation using the market ETFs. S&P 500 ETF SPY. Backdrop color is now bearish in the weekly chart for 2 weeks. In the daily, it broke below the trend line support. However, it is still in an uptrend with higher high, higher low. If you look at the expected move, it is in the middle of the expected move. Middle of the expected move. Nowhere near the high nor the close of the expected move. It's right in the middle of the expected move. Still in an uptrend. QQQ. I mentioned the bearish headwind in weekly right when it appeared, and I had taken a short position. I mentioned that publicly at that time, and as price came to the weekly trendline support, I had booked profit in the bearish position that was using verticals, short call verticals. I have booked profit in that. I see that the daily trend line support is some distance away, but the weekly trend line is right below closing price. So I didn't want to risk the profit erosion. I booked profit in the QQQ bearish trade using short call vertical. It is still in an uptrend with higher high, higher low. Even if it comes down to this daily trend line support, it will continue to remain in an uptrend. Dia, it was moving inside a triangle, and that is continuing moving sideways. Came to the trend line support in daily as well as weekly. It will not be surprising to see that price will bounce up from these two trend line supports. And if that happens, you may look for long setups, but we should wait. Q traders would wait to see that the reversal is happening, probably using intraday fine-tune chart before trying any long trade. Dia state is same as in the last webinar, moving sideways, and IWM moving sideways. When price was near the swing high, I mentioned that it was time to look for short trades more than long trades because it was near the memory resistance, trendline resistance. It was also near the upper edge of the sideways range. I didn't short it at that time. I took a dia short, and later on I took QQQ short also. I didn't take any short in IWM. It is now in the middle of the sideways range. That's a no trading area. Here also the expected move is seen in the alternate chart. Price is nowhere near the high or the low of this week's expected move. And that was true for all the market ETFs. In terms of USA market ETFs, the state has not changed since the last webinar. SPY and QQQ are continuing in an uptrend, and DIA IWM continuing to move sideways. What about the internals? Is there sign of weakness there? Let's first look at the mega caps. Custom index mega cap top 20. When price came in this area, I suggested not to buy it. That would be useful because after that price could not go up. At the right edge, the traffic light candle color is bearish. We wouldn't buy now. It will be normal for price to come down to the trendline support because it is now moving inside a range. From the upper edge, it is only normal for price to come down to the lower edge. So there is still some distance to go. We'll see if that happens or if price breaks out. Looking at this chart, it seems price will come down and hit the trendline support. That may happen first instead of breaking the trend line resistance to the upside. But we'll see what happens. Right now there is no trade setup. Moving sideways. So mega caps are moving sideways. Dia moving sideways, that is industrials, and small cap IWM moving sideways. Let's now look at the market breadth, broad market breadth using the composites, the entire exchanges, Nasdaq and NYSE. First, we look at the yellow line, percentage of stocks above 50 MA that declined for both Nasdaq and NYSE. Nasdaq is around 35%, NYSE is around 40%. So NYSE is continuing to remain stronger, though the difference has reduced. Earlier, if you remember, the difference in these two percentages used to be 10% or so. NYSE being 10% higher than Nasdaq, but now the difference has reduced to about 5%. NYSE is still stronger. In the last webinar, I showed that the peaks of the advanced decline up down volume coming down, kind of bearish divergence. However, these divergences in advanced decline up down volume, these are internal studies, they are more meaningful in the weekly interval. In the last webinar, I showed there was no bearish divergence in the weekly interval. I changed to weekly interval now. And that is true. There is no bearish divergence in the weekly interval now as well. If we look at the 3-month new high low, it is at the lower edge of the midpoint. This is the midpoint for both Nasdaq and NYSE. It is in the lower half, but it is not at the lowest extreme yet. So price may come down more before the new high low starts to reverse upward. Now we don't know from here new high low will go down or will it go up, because it is not at an extreme, more to the lower half than on the upper half. So it will not be surprising to see that price starts to recover from here. It will also not be surprising to see that price is testing the lowest extreme. No signal we are getting from that. It is not at an extreme level. And is there any large distribution count in market breadth total view that is created using the two full exchanges and 4 major indices, USA market breadth total view? Let's look at the yellow line again. Percentage of stocks above 50 MA is coming down now below the 50% level and below the average line also. Now it has lower high, lower low. In the last webinar, I mentioned we are waiting to see if it has lower high, lower low. Now it has displayed lower high, lower low again. So percentage of stocks above 50 MA is in a downtrend. Lower high, lower low, below 50% level, midpoint, and below the average line as well. If we look at the 3-month new high low, same as the composites, it's in the lower half, but not at the lowest extreme. From here, it can go either way. Is there any distribution count? There is one distribution count yesterday, but that is of 1. To be significant, it has to be a distribution count of 2 or more. We still don't have that, and we have no Hindenburg. So I am not expecting, just as in many previous webinars, for price to drop sharply suddenly, because it didn't happen like that before. What kind of stocks are in favor? Growth versus value, magenta line, that was going up and that is continuing to go up. That is, growth is outperforming value. And if we look at small cap versus large cap, that line has now tilted down. So small cap is underperforming. Again, there is no change from the previous webinar. That was a look at the USA market and global markets. For USA market, we use market ETFs and also many in-depth studies looking at the internals, and we see from every angle there is no change in market state from the weekend webinar. It is the same view, And I expressed in the last webinar that I don't have a preferred trading direction. From here, market can go either way, and I'm continuing with that view this week as well. Though the market ETFs, market breadth, global markets state did not change, Q edge has some change in state. This very useful sector industry stock advance decline from 1 month to 1 day. A couple of webinars ago, the 1 and 2 day periods were green, and I mentioned that because of the flip-flop that is happening for a long time, it was expected that 1 day, 2 day periods would turn red. That happened, and now not only 1 and 2 day periods, all the other periods, 5, 10 day periods, and also 1 month period, everything is now red. Yesterday was very bearish. We can see yesterday 100% of sectors were down, 92% of industries were down, 80% of stocks were down. Some of the sectors were down by large percentages. If we look at the bucket analysis compared to 1 day ago, 10% stocks crossed below the mid Bollinger Band. So this bucket analysis, mid bucket analysis pie chart is showing that overall the market is bearish now. It can be still more bearish before reversing. It's 70% bearish now. It can be 80% or even more bearish before we expect a reversal. And if we look at the most extreme low bucket, that is percentage of stocks below lower Bollinger Band for S&P 1500, that is now at 16.9%. 1 day earlier it was 1.3%. That is a very sharp drop in 1 day, more than 15% drop. That may be spending too much fuel to go down too fast. That may lead to a reversal. The other thing that usually leads to reversal is when this percentage of stocks below lower Bollinger Band goes to 30 or 40%, but there is still some more room for that. So from one angle, that is the percentage rise in 1 day, we may expect a bullish reversal. From the absolute percentage in the lowest bucket, we may expect price to go down. So that is also telling us that market may go in either way. Now if we look at the sectors performance, over 1 day all sectors are down. Over 2 day, 3 are up, 8 are down. Which 3 are up? Communication services, that may be considered a defensive sector. Energy is up over 2 days, but energy is being up down. You can see yesterday it was down by a large percentage. Over 2 days it is still up by a small percentage, not very small, 1.4, but energy is flip-flopping between positive to negative. If we ignore that, the other sector that was up over 2 days is real estate. So real estate and com services both are defensive sectors. If we take a step back further, then we see over 5 days now all sectors are down. Over 10 days only one sector is up, green bar. Which one? Energy. But energy is flip-flopping, let's ignore that. Over 1 month 3 sectors are up, blue bars. One is energy, ignore that, flip-flopping. The other two are healthcare and infotech. Infotech is still up by a small percentage over 1 month, and the other sector is healthcare, that is defensive. However, when we look at the bars above the zero line and bars above the below the zero line point, it is clear that certainly overbought, and we may expect a reversal from that angle. That is what I mentioned in the previous webinar also, but the reversal yet didn't happen. That's why it's important to wait for the actual reversal to happen, at least on intraday fine-tune chart, before trying to take a long trade. If we look at yesterday's intraday market breadth, let's look at the advanced decline intraday for Nasdaq as a whole. NYSE, okay, let's do one by one. For Nasdaq as a whole, it started positive advanced decline, immediately crossed below zero and continued to weaken throughout the day, closing at a very large negative value 1800. Anything below 1000 is significantly bearish. So it started positive but weakened throughout the closing pretty bearish. NYSE advanced decline, same thing, opened positive, immediately reversed and continued to go down throughout the day, closing well below minus 1000 point. And these are very broad internal studies for the exchanges as a whole, Nasdaq, NYSE. They gave very nice shorting opportunities yesterday, especially QQQ. If you look at the QQQ chart, the stop was never hit, it came down significantly, covering much more than the risk distance. Now, if you look between Nasdaq and NYSE, both the advanced declines were weak. Now, would you like to short QQQ or SPY? Maybe using the futures, would you like to short NQ or ES? If you look at the intraday fine-tuned candle charts, then you see that QQQ gave a very low risk short opportunity when it went below early range low, whereas SPY or ES would do the same thing. It went up but never really hit any significant pivot level. So you don't know whether there is a low risk short entry point on ES or SPY, but it was clearly there in NQ or QQQ. So in this case, using the internal weakness and looking at the individual fine-tuned charts, you would decide probably to short NQ or QQQ, not SPY or ES. And that decision would also be supported by the up-down volume. Up-down volume continued to go down throughout the day. Now, if you look at IWM, this is also quite broad, or the Russell 2000 advanced decline. It did the same pattern as Nasdaq and NYSE, opened positive, immediately went down and continued to trend lower throughout the day. Now, if you look at the fine-tuned chart here also, we didn't have an easy shorting opportunity on a bounce to the pivot line because it never hit the early range low. It stopped short of that. So if you shorted right at the breakout point of early range low, that would be fine. That opportunity was there in QQQ also. That opportunity was there in SPY also. If you waited for a bounce and then further coming down, then only QQQ gave such a trade setup. Neither Russell 2000 IWM nor SPY or ES bounced to a major pivot, so we couldn't short it. The same was true for DIA. If you shorted right at the breakout of early range low, that would be nice. The advanced decline in Dow Jones would also support that. Started positive, immediately turned negative. QQQ we already saw. We could short in the rebound point also, and SPY we already saw. Now, among these, it seems that we could easily short QQQ at the rebound point. Now, if you wanted to short at the early range breakout point, which one was most appealing? To me, the most appealing would be either DIA or IWM because both of them went above previous day's high It actually opened, it seems, above previous day's high. Let's check that out. Dia, yes, it opened above previous day's high. And IWM, yes, it opened above previous day's high. So if you look at the intraday charts, when price went below early range low, both IWM and Dia gave a gap short day trade setup. So you could short Dia at this point, IWM at this point, putting stop just above the early range high, which was never approached. And of course, you made a much more profit than the risk distance, than the risk taken in the trade. For the two major indices, Nasdaq 100, S&P 500 also, the same pattern followed. Opened positive and immediately turned negative, continued to trend downward throughout the day. We already saw that happening for all the other indices. So yesterday was a very bearish day. Why I went through this analysis is that I mentioned there is a chance of market reversal. I'm not sure about the preferred market direction, but the reversal did not happen on the intraday fine-tuned chart or market breadth studies. That's why, though you could look for a reversal upward, you would not take a trade because the market actually didn't reverse, and you could see that from this intraday market breadth studies. Q edge weakened compared to the previous webinar. That is sector, industry, stock, advanced decline, breadth declined. Unlike the other studies that we saw, other studies did not have any change. And what about technical breadth? If we look at the weekly interval, balance between bulls and bears, in the previous webinar, we saw all the four categories were bearish, but now it is not so. Now three categories are bearish and reversals are balanced between bulls and bears. So in terms of technical breadth, there is some improvement. The reversals are now balanced. Another thing to note is that in the previous webinar, the percentage of stocks displaying bearish headwind was above 3%. That is, percentage of stocks giving bearish headwind in the weekly interval was above 3%. That was an alert level. Now it is only 0.4%. So the stocks already came down. That's normal to happen, that percentage of bearish headwinds will come down, and it is not at an alert level yet. So we have two changes since the last webinar: bearish headwinds in weekly interval not at an alert level anymore, and reversals are balanced. The other categories are still bearish. Overall, it is still bearish. And if you see yesterday's technical breadth, that is very bearish across all the categories. It is pretty oversold condition. From this angle also, we may expect a bounce, but we will not take long trades unless we see the bounce happening, at least using intraday fine-tuned market breadth charts, which did not happen yesterday. We may see if that happens today. You may notice that there are about 10% stocks giving breakout bearish setup yesterday, and about 10% stocks also giving bearish go with flow setup yesterday. You could see this graph in real time also, because Q Global, on which this Q Finder is based, can process trade signals in real time. And if you saw that 10% of stocks are giving bearish breakouts, 10% of stocks are also giving bearish go with flow, you could look for bearish trades. Let's do that now. Let's flag for bearish breakouts and also flag for bearish go with flow. Let's look at the stocks with the biggest drop. Let's look at the stocks that went down by at least 1%. 32 stocks. Now, instead of looking up all the 32 stocks with technical charts, I would like to see which of these stocks are fundamentally weak, are in weak industries as well. So let's carry out a peer analysis. And now I'm trying to find bearish trades from yesterday's signals in real time. I could do this during market hours yesterday near the market close. That would be real time. Now is of course after the market close. So we have calculated the fundamental scorecard of these stocks. 32 stocks. Let's look for at least one star bearish candidate. We are left with these few stocks. Now they are fundamentally weak. I could look for technical setups, but not yet. Let's look at their industries first. So I'm looking up their industry rotation table from QH, and I can see in terms of relative score only these three looks weak enough to consider short trades, and in terms of deceleration we may also choose biotech. So I am interested to look for short trades in these industries only. And I already looked up the stocks with weak fundamentals. Let's go back to the same stock list in QVital. And now I have restricted to the stocks in those weak industries. Hit the one star bearish button again. Now this is my final symbol universe. What are these stocks? These are showing bearish go with flow setup, showing a breakdown setup. They are all fundamentally weak, either overvalued or with negative earnings growth, and they are all in weak or decelerating industries. So I started with a large instruments universe, more than 2000 stocks, and I could quickly narrow down to 6 stocks that are in weak industries with weak fundamentals with breakdown and go with flow short setup. Let's look them up using Q technical charts. Well, the first one itself is looking quite interesting in terms of shorting. This is EWBC, East West Bangkok. Let me keep this for now. I'll come back to this and look at it using weekly daily. Next one, NBIX. I think the earlier one was looking more bearish, and NBIX seems to be a biotech stock. Biotechs can suddenly go up as well or go down as well. I tend to avoid trading biotechs for that reason. Given a choice, I would swing trade non-biotech stocks. So let's exclude NBIX. GOL, this is an airline stock. It technically broke below this trend line support, but not convincingly. For practical purposes, it is moving sideways now. It was in a Q squeeze. Still, it has not gone out of the squeeze because the squeeze dot has not turned green. It's inside a squeeze, and practically you may say it is also still inside a triangle. So let me exclude this airline stock. Next is STL. Broke below one trend line support, but there is another trend line support. Let's exclude that. BBIO broke below one trend line support, but has another trend line support. Not going to short now. GPRE broke below one trend line support, but closed right at the next trend line support, and it is moving inside a range. So let's exclude that as well. So I'm left with one stock only, EWBC, East West Bangkok. Let's look at it using the 3 chart template. Great. The weekly, once again, it displayed the bearish headwind at the very top. Since then, price could never go up. Instead, it significantly came down. At this point, it hit the trendline resistance and came down from there again. This week, backdrop color is bearish, shape is bearish. In the daily, it has a nice breakdown with a possible Goith flow setup, bearish flow. Also, it is coming out of pendulum high, price extreme high with a reversal candle. That is a powerful combination of bearish signals. And if we look at the momentum signals, Bongo turned red. We have Mobo breakout from a squeeze with a Kahuna, bearish signals. So there are plenty of bearish signals in this stock EWBC. That is how in real time you can carry out a comprehensive analysis looking for trade setups, not only in terms of technicals but combining technical, fundamental and industry strength. Now yesterday I shared another stock in the same industry, banking industry at least, banking related you may say. Let's look at that. I shared it on my website sagarnandi.com. It was on Morgan Stanley, finance sector, not exactly banking industry. And using Q sonar in real time, I could see many bearish signals in Morgan Stanley. It had a bearish false move, plus it had a bearish reversal, came down with bearish pressure, had a bearish breakdown, bearish go with flow, trend following short setup, Mobo breakout, and a bearish Kahuna. So it had almost the same signals that we saw in the banking stock right now, only it was not in a squeeze. Every other signal for Morgan Stanley, they were same as the other banking stock, and it was also reversing from pendulum high. So the sonar instantly showed many bearish signals, and the industry was weak. It was strong earlier, very strong earlier, and now it has weakened significantly. So the industry allowed us to short. In terms of fundamentals, it was not so weak. Well, it's still weak. Medium valuation and negative earnings growth. 95% of PR stocks in investment banking and brokerage were down yesterday, and year on year quarterly earnings growth came down. Year on year quarterly revenue growth came down. So the fundamentals allows us to short, and this is how the chart looked like when I shared it. I think near the market close, but before the market close, the weekly backdrop turned bearish. Earlier it displayed the bear release and then the indecision at the top. The weekly shape was bearish. Daily once again displayed the bearish headwind at the very top, and then just yesterday it broke below the trend line support with bearish flow, with a Goith flow setup, with bearish pressure, and once again, like the other banking stock we saw, at pendulum high displayed a reversal signal, and we already saw from Q sonar it had Mobo breakout and Kahuna, Bongo turned red, PSAR bearish reversal, and also we had the biggest down move in 1 month. So many bearish signals. That's why I suggested a short setup in Morgan Stanley. I took a short setup as well. I used verticals in it. Why did I use verticals and not short with the stock? One reason is because I am not able to decide my preferred market direction. So I didn't want to get stopped out easily. That's why I took a short trade in Morgan Stanley yesterday using verticals. I think I used short call verticals. I will not go through more stocks today. I explained to you once again how you may use the Q systems to find trade setups in real time or after the market close. You may do the same today. Let me end today's session here. We'll have the regular public session during the next weekend, and tomorrow I'll have the Q master class second session at 11 a.m. that is open to the people who register. Thanks for joining this session. I look forward to seeing you in my next session. Have a great week and trade profitably. Thank you.